There are two essential players in the game of buying assets, and that's supply and demand. In order to be successful, you have to understand how one would beat the other, and you've come to the right place. Good morning, good evening, I'm Maniac and welcome to my channel. In the description down below, you'll find my link to my website that has all things Maniac services. If you have questions on how blockchain technologies work, or you want to dive deeper on the concepts we talk about on this channel, when you visit my website, there's plenty of services there that'll help you get in touch with me so you can dive deeper and understand these technologies and concepts. Remember, none of this is financial advice and you should always do your own research. Before we dive into the overview of supply and demand, let's first make sure we understand some of the basics. Let's go over how to read a candlestick. Candlesticks are most commonly remembered by their body, usually the largest and most colorful part of the candlestick. The meaning of the top and bottom lines of the body depends on the color of the candle. If the body is red, the top line is the opening of that candle and the bottom is the close of that candle. If the body is green, then the top line is the close of the candle while the bottom line is the opening of the candle. You also have the upper and lower shadows, also known as wicks, of a candlestick. Now, what do these parts mean? The tip of the upper shadow will tell you the highest worth that asset was during that candle duration. The tip of the lower shadow shows you the lowest that asset went during that candle duration. Alright, now that we kind of understand the basics of a candlestick and how to read them, let's move on to supply. Supply is a fundamental economic concept that describes the total amount of a specific good or service that is available to consumers. Supply can relate to the amount available at a specific price or the amount available across a range of prices if displayed on a graph. Let's look at the housing market, for example. When the supply of homes is shrinking and the pool of buyers is expanding, you see there's a competition on who wants to buy which home, which drives the price of a home up. Now, vice versa, if we see the supply of homes is expanding while the pool of buyers is shrinking, we're going to see the cost of homes in that area go down in price because now sellers have exceeded buyers in the market or supply has exceeded demand. Now that we kind of understand how supply works in this all, let's look at a technical analysis chart and see how supply would work on that. Supply will stop an asset from raising in worth, or if supply fails, you see green candlesticks push beyond a resistance point. Here in this example, you see wicks that attempted to push up further, but supply denied that advance and pushed the asset down in worth. This happens when people begin to sell their assets. This is a Bitcoin chart, which means people who hold Bitcoin are selling off their shares of that cryptocurrency. When you see supply break through a point of support, the sell orders far exceed buy orders, which drove the worth of that asset down. We also see here in this chart that supply has formed a point of resistance for demand, this ceiling right here. If demand were to be too strong for supply and they broke through this point of resistance, we could see a bullish run. Let's swap sides now and see this from the demand side of things. Demand, the enemy of supply, this never-ending battle between the two that are constant. Demand is a fundamental economic concept that describes the quantity of an asset that people are willing to buy and at what price they are willing to buy that asset at. Here's an NFT secondary market, for example. In this secondary market, we see supply has listed several NFTs at a specific price or at a range of prices. If demand were to begin initiating a move on the secondary market, we could see these NFTs begin selling off and the floor price rise as supply shrinks. If we see the floor price begin to dip or lower without demand pushing up the worth of the assets, then we will see supply begin to exceed demand again. This is where we would wait to find a support point where buyers re-enter the market at a certain price that the asset drops to. Take a look at this chart that shows demand taking some wins against supply in this technical analysis chart. You can see here, demand began increasing when Bitcoin hit a certain price point. Buyers really liked that price and sellers could not keep up with demand. Buyers now exceed the supply and drive the worth of that asset back up. There is now a point of support on this chart we see where buyers step in if a price drops down that low. If the price were to break through that support line, we might see demand lose another battle with supply and find ourselves with another bearish run. If we see demand drive the worth of that asset up to that resistance point supply set earlier and break through, we usually see a bullish run on the charts. Or we might see demand bounce off that ceiling. Then supply and demand have to figure out which direction they will go from there. I've barely scratched the surface on supply and demand and just gave you a taste of how to understand this complex battle that's never ending within the markets. Subscribe to my channel and like this video if you want to have more educational content like this in your feed. I will be posting many more educational videos that go over concepts just like supply and demand. Don't forget, down below in the description is my website. If you want to dive deeper into the understanding of blockchain technologies or concepts that I speak on when it comes to investing, go check out my website and see the services I provide. Thank you so much for watching my video. I hope you have a good morning or a good night, and I'll see you next time.